Hi, this is Ricky Madatu, Head of Equities from our Trust Banking Group. Today, I'm here to share to you our views of the market in September and also our outlook for the year. Now, stocks had a brutal 13% plunge in September, ending below 6,000 for the first time this year, as the peso suffered one of its worst single-month loss of more than 4% due to the Fed's renewed hawkishness. The index plunged below 6,050 support level established in June, dragged by laggards like Monde, ASEN, and Converge. Only two index stocks managed to eke out gains for the month, with Wilcon and SMC. The Philippine equity markets followed the way of global equities in September, with global all-country index down close to 10%, US S&P down 9%, MSCI Europe down close to 9% as well, and MSCI China, one of the worst performers, down close to 15%. The Philippines continues to lag its ASEAN peers. The positive sentiment in August reversed following the Jackson Hole Symposium, where the Fed delivered a blow to the market's faint optimism of a decent rebound by indicating a more aggressive tightening in its resolve to subdue inflation back to its comfortable levels. Now, as you would know, US inflation continues to run hot, above 8% at its highest levels in the last 40 years. After another 75 basis points jumbo hike in September from 2.5 to 3/4, expectation for the peak of Fed funds rate broke above 4%, with most analysts calling now 4/4 to 4.5 by the end of the year. This renewed concern plus the peso's weakness conspired for the PSEI breaking the 6,000 support. The BSP also raised rates, but at a slower pace, up 50 basis points to 375 to 4/4, with the differential between the BSP rate and the Fed funds rate tightening from 125 basis points to just 1%, causing the peso to depreciate further against the dollar. Now, the BSP would most likely continue to hike rates as well, with inflation CPI at 6.3 versus July 6.4 is expected to peak in November or December this year. Now, the markets would most likely still be arrested by external headlines, with the October 13 CPI print and the November 1 FOMC meeting the main movers in the weeks ahead, with expectations of higher CPI and another 75 basis points hike most likely to drag risk sentiment further. Third quarter earnings for Philippine corporations will be in full swing as well, starting end of October until the first half of November, with expectations on the upside as face-to-face school reopening and the onset of the first high-mobility Christmas season in 3 years come into the picture. We have understandably turned defensive on the onset of the aggressive central bank moves we've seen in September that would most likely persist until the end of this year. While the third quarter and even the fourth quarter earnings would most likely boost sentiment, the direction of the market is now more hinged on global developments, with downside risks more pronounced. Even with the recent sell-off, we maintain our overweight on financials and underweight on real estate given its sector-specific risks. We have downgraded our 6 to 12 months target for the PSEI from 7,200 to just 6,600, still at 15% upside from where we ended September, on earnings potential and hopefully a peak in inflation expectations to be seen for the remainder of the year. Now, the key support for the index, as we see it, is at 5,700, with 6,300 now the near-term resistance. Again, thank you for joining us, and hopefully all of this information from the economic data to our views of the market would help you in your investment decisions.